right, guys, I'm going to get going. So my name is Jason Banducci, and I'm the Vice President of Corporate Development for Millennial Precious Metals. So I will be making forward-looking statements. I urge you to read the disclaimer, which can be found both in our presentation and on the website. So who are we? We are, as the name states, we are a couple millennials, and we are exploring for precious metals in Nevada. So we're focused on precious metals exploration, but we do want to be a multi-million ounce, multi-asset production company one day. And we are focused on near surface heap leachable ounces in the world's top mining jurisdictions. And so we've got 8 assets, 7 of which are in Nevada, 1 of which is in Arizona. So we're focused in the best jurisdictions in the world, and we're focused on heap leachable ounces because low cost of discovery, about $5 million to discover 1 million ounces versus, if you look at an orogenic system, it's going to cost you 30. And again, in this world of inflation, we want to find projects that are low capex. So we're looking at heap leach projects, simple, low cost. Even we're looking at a combined operation between 2 of our main projects right now, and you've got capex around 130 to 150 million American, which is, again, in this world, it's digestible. So if you take a step back and look at the company as a whole, we've got 8 assets, like I mentioned, 7 of which are located in Nevada. 1 is in Arizona. We've got a team behind 59 million ounces of global gold discoveries. We've got a current resource base of 1.2 million ounces of inferred oxide gold. And we recently kicked off, and we'll be wrapping up this year, a 20,000 meter fully funded exploration drill program across 3 of our key assets, which are going to be at Mountain View and Wildcat. And we already completed our drilling last year at Red Canyon. And just so you guys know, we look at Mountain View and Wildcat, it's almost one combined project. They're about 55, 60 kilometers apart. So when we look to develop them, we're going to develop them in tandem. Each asset will have its own pits, pads, and ponds, and we'd have a centralized stripping facility at Wildcat, which is the larger of the 2. And so if you look at our focus as a company, we are focused on advancing Mountain View and Wildcat in the near term. The rest of the portfolio, it takes about 10% of the budget annually, but we recognize that the market wants to see ounces, growth, and production, and we can do that the quickest at Mountain View and Wildcat. So who are we? We are part of the Talisker group of companies. So you'll probably recognize a couple of the names up there. The founders of the company, Jason Kosick, who's the CEO, Ruben Padilla, who's our chief geologist and one of our directors, and Terry Harbert. They form the Talisker group of companies. Talisker, essentially what they do is all the technical due diligence for the OTCQB group of companies, which I'm sure you guys have heard of before. So Ruben, he runs Sable Resources. Terry Harbert runs Talisker Resources. Sable's focused on South America. Talisker is focused on Canada. And this was the company or the group's first foray into the United States. A lot of the faces you'll see, again, have former experience with OTCQB, Anglo Gold, BHP, so big companies. Myself, my background's on the finance and capital markets side. I spent the last 8 years in investment banking. This was the company I made a career change and took a pay cut for. I truly think it's a unique combination of people, high quality assets in the right jurisdiction, and assets that are actually going to become a mine one day. So from a corporate perspective, this slide's going to need a little update. We last week launched a $15 million bought deal financing, which was oversubscribed in 2 hours. We'll close on about 17 and a half of that, which will bring our current cash position to about 21 million after the financing, which again, I echo some of the comments of the panelists earlier. It's not a pretty market for raising money in any junior exploration in any junior exploration company right now. We're lucky. We've got a very supportive roster of shareholders that were, there to support us. You can see that if you look at who our shareholders are. We're about 50% owned institutionally. You've got Merck, Eric Sprott, Franklin Templeton, Century, Brahma, which is the Lundin family office. So there's real investors there. And again, we've only been public for a year. We're a brand new company. We've got 5 brokers covering the stock. Target prices from 90 cents up to $1.40. You look at where we're trading in the market right now, about 40 cents Canadian. And if you look at what the analysts, what they model, it's basically a combined operation with just those 2 assets I was talking about, Mountain View and Wildcat. Between those 2, we can push over 100,000 ounces over 10 years. So million ounces of produced gold in Nevada, heap leach, low CapEx. There's not too many of these things left. And that's where the target prices are formed off of. So, we like to think that in the share price right now, you've got an easy 2 to 3 times return just on Mountain View and Wildcat, and you get the rest of the portfolio for free. So this is what I think is the most important slide in our presentation. And, everyone loves to talk about grade. Grade is great, but it's only half the story. You have to look at strip. And this is, this stuff's especially important when you're looking at open pit heap leach projects, because grade's going to drive your revenue, but strip is going to drive your margin. It's going to drive your cost, which is going to create your margin. And, this is how a strip adjusted grade is how Barrick, Kinross, all the big guys look at projects. Grade's only half the story. And so if you look at all the open pit heap leach projects in Nevada, we actually have the highest effective grade open pit gold project in Nevada. And again, to get that effective grade, you have to divide your resource grade by your strip ratio. Your strip is how much ore you're going to have to move to get to that economic ore. And so, it's something that a lot of people don't show because it generally doesn't look that good, but we show it because this is what's going to drive margin. And, mining is no different than any other business in the world. It all comes down to margin. So we take it another slide further because we've got retail investors who ask us, how do you make money at, we put out drill results and it'll show 0.5 grams and they say, how do you make money at 0.5? Well, this is why we built this slide. And so this shows you exactly how you make money with these low grade oxide deposits because they're near surface. So if you take our effective grade, which is 0.42 grams per ton, and you apply, again, a gold price, and we look at projects the way the majors do. It can't just work at $2,000 per ounce. It's got to work at $1,200. So if you look at $1,600, you look even at $1,800, which is, $1,850 is the prevailing gold price. At that gold price on an in situ per ton basis, our rock's worth $22 to $24. If you back out the cost, it's going to cost, back out the cost to mine, which is about $11 per ton in Nevada, you're looking at a margin of 50 to 60%. That works, right? It works at $1,200, it works at $2,000. And that's what, that's why we're so comfortable with these projects and why we believe, these are going to be some of the next projects you see come online in Nevada. So just a little bit of, positioning here. Right now, we're about a $60 million market cap US. We've got 1.2 million ounces of gold. We traded about $40 an ounce. We see, so 2 of the big catalysts this year for us, we've got an updated resource in Q3, and we've got a PEA in Q4. We're going to push that 1.2 to 1.5 million ounces contained oxide, and hopefully up to 2 if you take in the sulfide as well. We like to look, you can look at all those companies. We think our best comparable is a GSV, which is a $200 million company. If you see what we're going to put out in the PEA at the end of the year, it's going to be a project that pushes the same amount of ounces. So again, this is why we think there's an easy 3 to 4 times return on the stock based on how we're priced now and where we're going to get to in the next 3 to 4 months. So last thing, we've accomplished a lot in 2021. We've drilled at 2 of our key assets. We've gone public on 2 exchanges. And then this year we've actually started drilling at our final project, Wildcat, all of our drill results can be found on our website and online. Some of the best drilling we've seen in Nevada, and drilling that's going to reflect a real project that we're going to show in the updated mineral resource and PEA this year. So last things last, why do you want to own the stock? I think there's 5 reasons. And if someone can't tell you in 5 reasons why to own the stock, you're wasting your time. So 1, it's the right team. We've done this before. Team behind 59 million ounces. 2, we're in the best jurisdiction in the world. There's roads, power lines. There's no animals. We don't have to worry. We're in the desert, and mining's been done here more than anywhere else in the world for gold. We've got high quality assets. We've got top tier shareholders, as evidenced by, we raised $17 million last week. There's not a whole lot of other junior gold exploration companies doing that. And we're catalyst rich. As I mentioned, in the next 3 to 4 months, 3 to 4 times return, driven by an updated resource showing growth and a PEA showing a project that's going to push 100,000 ounces for 10 years. That's all I got. Thank you, guys.